150. But, the gap is closing so fast, and we are now about 400 odd points away as we speak. So just a very, very powerful move is what we're seeing.
Well, a lot of it is courtesy IT. So pull up that contribution play. The Nifty is up close to about 165 points right now. Out of that, 110 to 120 points is courtesy the large cap IT names. So Infosys is the top gainer in terms of a contribution with an up move of 52 points. TCS is contributing about 33 points. And lower down, if you go, you would see even Tech Mahindra, LTI, Mindtree, Wipro are contributing. So about 70 to 75% of the Nifty gains today are on account of IT. Reliance too is a big mover. Banks were not performing. In fact, in the first half of the trading session, if you pull up, the Nifty bank was absolutely flat. It was the IT index doing the heavy lifting. But now look at that banking index in the last 1 hour of trade. It's picked up pace and is currently up close to about %0.5%. And one more stock, IREDA, right? 5 days and the stock had doubled. And today you are seeing some profit booking. It's locked in a lower circuit of about 10%, but this follows 5 days of big gains when the stock had doubled from 60, 65 to about 120.
We usually see that in a lot of these new IPOs that have come by, which had a fair amount of demand for the issue itself. The first few days of them on the bourses, see a lot of purchase. That's also on account of lack of supply because most of the shareholders have been locked. So let's see whether that, lock-in, whenever that opens, what happens when there is a first brush of supply coming in all of these new names. But I take your point, Rima, it's the IT index, and in the second half it's the Nifty bank, which was pausing for breath in the first half of trade itself. And over the weekend, by the way, guys, in Bangalore, there is a big rock concert going on. You have the Goo Goo Dolls performing, you have Deep Purple performing, what have you. Ahead of that, I think the street's taken note, and the music today is heavy metal. The metal index is at near record high. We have, most of the metal stocks doing well. Starting from the PSU metal stocks, we have Nalco, which is doing well. SAIL did well in yesterday's trading session, entered F&O ban. And now as we speak, all the metal stocks are at the high point of trade. So those are the, sectors and stocks which are doing well. In terms of levels that one has to look at, one also has to keep an eye out on the expiry next week. Yesterday was weekly options expiry. To that, the Nifty 21,300 mark seems to be a bit of a fulcrum because we are seeing a fair amount of writing at both the 21,300 call and the put. On the put, there is 80 rupees of premium on offer. On the call, there's close to around 140 rupees of premium on offer. Round that up, close to around 200 rupees on offer. You're looking at a range between 21,100 to 21,500. For the Nifty bank, 48,000 seems to be a bit of a resistance. That's where we're seeing a bit of, call writing. So that's something we'll be watching out for. And in terms of stocks, it's the mid-cap IT, large-cap IT, any IT names which are doing well, seeing fair amount of long positions being added. But short positions in a market like this are far and few in between, and they are all life insurance names. All of them for the second day running are seeing a sell-off, underperformance, and fresh short positions being added on them.
Our insurance man will join us.
Yep.
With
on the value surrender.
Yash is waiting right outside. He's going to tell us more about this. But yeah, I mean, in a booming market, that's the space which is actually taking a bit of a knock. Mangalam, Google also is still performing. It's
yes, they are.
Outstanding.
Just the way the stock market participants and all the investors think that there is no other place but India. All the musicians and all those performers who have had their day in the sun in the Western countries are now coming to India because everyone's lapping these performances.
That's my kind of music. My era, not my era, but our era. I mean,
you guys can talk about it.
You span across eras with your choice.
I'll be going there. So in case you want to join me, yeah, I'll be there.
So I thought when you said Bangalore, you're referring to the money control CNBC-TV18 AI Summit.
Exactly.
And I was like, oh, he's going to be there tomorrow.
I mean, AI Summit is fun, but not sure it'll be as fun as Deep Purple and Goo Goo Dolls.
You've got my vote there.
It could be interesting if we get them to play there.
The AI guys?
The other way around. All right, anyway, let's just get back to the market. We'll tell you what to do now. Mitesh is with us with exactly that. Mitesh, hi. I mean, it's big moves, and I think every time we talk to you, that's the phraseology we use the most. Big moves. That's the kind of market we seem to be in. What to do now, though, as we get into the weekend mode, Mitesh?
Prashant, I think, as I said, I think this market will enjoy good momentum on the upside and there's no sign of reversal. So I think maintain a long position. I think that's a very simple way of trading a market which is showing directional bias, trended bias. And now I think I would want to trail the stop loss at 21,200 on the spot, which is just above yesterday's high, and there's a gap created today morning. And again, I think there's good amount of upside, I believe, is left in the bank Nifty, which would still in the short term try and test 48,500, but eventually I'm looking at 49,500 to 50,000 zone as the target area. So maintain a long bias. On the stock side, I have a buy on Federal Bank. That's a stock which has given a mild breakout. So keep a stop at 153, look for targets of 164 here. And granules, disclaimer, it's a part of my portfolio. Granules could be now seeing some signs of accumulation. So buy here and accumulate slowly with the stop below 380. Look for targets of 410.
Okay, those were some trading ideas. Let's talk about IT. The IT index has seen a rally of 7.5% in 2 days. And if you compare it with the Wednesday intraday low, then we're looking at a near 9-10% kind of a rally. Large cap moves in 2 days. 6% for TCS, Infi up 8%, 8.5% for HCL Tech, and HCL Tech was a stock which was already at record highs, and it continues to add some more. Midcap IT soared in the last 2 days with a double-digit up move for Mastech, Cyient, Persistent, and Emphasis, gains ranging between 10 to 11%. So what's driving the up move? One, the Nifty IT index is still not at its all-time high level, which is a number above 39,000. It's still about 10% away from those levels. And if you look at the individual names, HCL Tech is at a record high, TCS is about 8% away, Infi 20%, Tech Mahindra 30%, and Wipro 40%. That's one. There is that catch-up versus the rest of the market, which is at all-time high levels. Two, valuations too are not at their peak levels. So for TCS, now with the up move, the stock is trading at 26.5 times forward multiple. The peak valuation multiple for IT names was sometime in, in the early part of 2022, in the post-COVID digitization boom, when digital transformation became the name of the game. All these stocks saw a, big PE re-rating. So stocks is still not at the record PE levels. And there is hope that demand will bottom out with macroeconomic certainty. So clients will start loosening their purse strings and start spending. Also, if many of the clients of IT company were debt-ridden, they had debt, now the amount that they need to pay out for financing the debt will also come down with the expected decline in interest rates. So in that sense, there is going to be cash saving, actual cash saving for clients of IT company, which could be deployed for technology spending. Now that's the positive, what's driving the rally. What's the risk? The near term is still very, very muted. Companies that we've chatted with, analysts who've spoken to companies at various conferences have indicated that Q3 furloughs are probably going to be higher than normal. They haven't seen any improvement in demand. Not that it's deteriorated, but demand continues to remain muted. There haven't been any mega deals. If you remember, the story for IT over the last 6 months has been very large cost optimization deals. But this time, in Q3 at least, we haven't seen any such mega deals. And that said, clients are still not talking about when demand will revive. They're not saying, they're just saying it's too early to assess when we will see a pickup in corporate spending, despite the recent news flow about the decline in the 10-year yields. We've got Sandeep Agrawal, fund manager at Sovilo Investment Managers, now joining in. Sandeep, first, tell us what is the corporate speak that you've picked up from management in the last 1 week, 2 weeks? And secondly, the people who are willing to invest in IT stocks now, can you tell us what is their thesis narrative? What are they talking about?
Hi, thanks for having me on the show, and good afternoon. So yes, so the interactions which we have in last few weeks at various forums, and also the people, because I come from this industry and a lot of friends are working in different tech companies in US and other developed markets. What we are now, getting information or the new way they are looking at is that, as it has been post-COVID also, that, they were continuously spending on digital transformation. There was a halt in between, and after that, in recent few months, what we are hearing is that, they are again reevaluating. This is the time when they have to take a call whether, the next year, that is CY24, how much budget they want to keep for IT. And that is the reason, there are some discussions which have been going through. Having said so, as you rightly mentioned, I don't see that, you will see any big change in numbers in next 3 months. But yes, I think order book numbers, which were good last quarter also, that trend will continue in this quarter also. But the bigger thing I would say for the sector with a sharp fall, which you saw in attrition, because that will lead to substantial jump in margins in the coming quarter. So it will be margin-led recovery followed by growth. That is the way I see the sector.
Are investors cutting checks to buy IT at current levels?
See, there are some investors, there are multiple type of investors who are looking at the sector right now. One set of investors are the one who, are putting money in the index funds and the ETFs and others. So by default, because of the weight, this stocks are also being bought in an indirect way. And secondly, there are some investors who run tech funds. They have started seeing flows. So that is another reason why there is a rally in these names. And third, I think, the biggest reason is that with interest rates, at least there is a signal that they may not go much higher from here in the developed markets, and primarily in the US, which is the biggest market for Indian tech companies. I think, investors are taking a call that the best way to play interest rate fall cycle will be to buy tech names. And that is what they are doing right now. So I think it is
All right. Meanwhile, as we speak, on the side of the macros as well, the rupee has seen a big surge. It's about to, break the 83 to the dollar mark, and that's also on account of what's taken place overnight in the dollar index itself. The dollar index has, moved below that 102 mark, which is the lowest levels that we've seen, if I remember, since August or so. And the rupee has gained more than 30 paise from yesterday's close, hit a 1-month high. It'll be very interesting to see where the rupee goes here, and will that prove to be a bit of a headwind for IT companies as well as we speak? Though the cross-currency movements have seemed to have lesser impact on IT names over the last couple of years or so. Your thoughts on this one?
So I think, as you again rightly said, that, currency has not been a big mover on either side in the past, because these companies all work on continuous hedge basis. Most of the companies follow continuous hedge policy. And because of that, maybe you can get some changes on the headline numbers, but bottom line numbers don't change much. So I think that same thing will continue. I think, most of the IT companies are well positioned at 80-81 rupees. Right now we are at 83. So some depreciation from here will not hurt, some appreciation from here will not hurt them in that significant way. Right now, I think the biggest delta for all the companies is the sharp fall in attrition, which they have seen last quarter, and that trend is continuing right now. So that is helping their margins in a very big way. That is the key takeaway, I think, which is happening in the sector.
Sandeep, if for people who are watching, if you had to give them one idea, what would that be in the space?
So I will put to say it is very difficult for me to give one idea, because we run a PMS and we hold many stocks. But I will give you an indication that, and I have been saying this for last several months, every time on your show and other shows also, that you should be with large cap value names like Tech Mahindra, HCL, Tech, few other names, where the downside risk is very less, and also these are very high dividend paying companies. So cash distribution is very strong, and also growth, they have always surprised positively. And at least places where there is a new CEO coming in, the chances of big turnaround, as we have seen in multiple mid-sized companies in past 3 years, those remains high. So I will still say that you should chase value with growth and not only growth and pay very expensive multiples right now. So you should look at large cap names.
Okay. Two specific names, if you can comment. One is Wipro. Nobody wants to talk about Wipro. And I don't think there's any ownership there as well, right? So it's extremely under-owned. And maybe for good reason. It's not performed for me. But how long can it go this way, right? So that is one. What are the chances on that one, briefly? And second is InfoEdge, which has done well. I think it's moved up about 15-20% over the last 3 months. But that largely seems to be a function of how Zomato has done. What are prospects for that one? Go on.
So I think, in the former case, in case of Wipro, I will only say when the sector does well, all the companies do well. And where there is valuation comfort, those stocks generally catch up quicker. So I think at this level, the risks are very limited. As far as InfoEdge is concerned, as you yourself mentioned that, it has become now a bigger derivative of how Zomato does. And based on what we are seeing in the current environment, if there'll be political stability and the economy will do well. These are somewhere, second or third derivative of economy as well. So I think even Info Edge should do well. And Info Edge is actually basically a best way to play a collection of, disruptive technologies or disruptive startups in the country. So I always believe that it is a must-own stock for most of the people who are looking from a long-term perspective.
All right, Sandeep, we'll leave it there. Thank you very much for joining us. It's a good conversation always, and come back more often. Good to speak. Thanks very much. Well, 180 points on the Nifty, 21,360 is where we are at. So it's a good-looking screen out there. Rupen Rajguru of Julius Baer will be joining in on the other side with more on the market. Stay with us.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
All right, welcome back. 180 points on the Nifty. But if you've been wondering, why are in such a up and up kind of a market, insurance stocks lower? That is because the regulator, the IRDAI, has proposed that insurance policyholders be paid a higher amount in cases where they surrender their policy before it matures. The proposal has companies worried about margin pressure. To understand this move, I've got my colleague Yash standing by to explain this in some detail. Yash, over to you.
Well, if you look at the insurance regulator's proposal, there are two major changes to product regulations. One would cheer policyholders and the other one spells good news for life insurance companies. Let's start with the policyholders. IRDAI has proposed increasing the surrender value of life insurance policies. Surrender value is nothing but the refund which life insurance companies have to give to their policyholders in case he/she terminates the policy before its maturity. Now, the proposal is to increase the surrender value given to the policyholders and reduce the surrender charges retained by life insurance companies. This is definitely beneficial for policyholders as he/she gets more when the policy is terminated, but negative for life insurance companies as they get to retain less in surrender charges. The move will impact a non-participating segment the most because that's where most surrenders really happen. Now, an analysis from Kotak says that the move could have a negative impact of about 140 to 200 basis points on the margins of these life insurance companies. Let's just understand this better with an illustration. Consider a non-participating policy with a premium of 1 lakh annually. The policy is surrendered in its 4th year, which means that 3 installments of premium or about 3 lakh rupees has already been paid in premium. Now, under the current regime, the first year is exempted from surrender charges and hence surrender value of 35% will be calculated only on 2 lakh, which is about 70,000. Now, as per the policyholder, will get 1.7 lakh in terms of surrender value. Now, under the new proposal, the insurance regulator has said that the policyholder should get adjusted surrender value, which is surrender value plus refund beyond the threshold. Taking the same example of the same policy on a premium of 1 lakh annually, a threshold of 25,000 is set. Now, for 3 years, that premium has been paid and the threshold will become 75,000. Surrender value of 35% will be calculated on the threshold amount of 75,000, which comes to about 26,250. Add to that will be the refund beyond threshold. So deduct the threshold amount, that is 75,000, from the total premium paid of 3 lakh, which will give you 2.25 lakh rupees. Now put both these two together, that is the adjusted surrender value, and that will be surrender value plus refund beyond threshold, which means 26,250 plus 2.25 lakh, which comes to 2.51 lakh. Now a quick look at the impact of the new proposal. Under the current regime, on a premium of 3 lakh policy, the policyholder gets 1.7 lakh as surrender value. Under the proposed regime, the policyholder gets 2.51 lakh as surrender value. The insurance company gets to retain about 1.3 lakh as surrender charges under the current regime, which reduces to just about 48,750 under the proposed regime. Now, in the second change, IRDAI has proposed to reduce the minimum sum assured in the regular premium category for age group more than 50 years. That has been changed or reduced to 5 times from 7 times. Now, as the sum assured comes down, the minimum sum assured, insurers will be able to lower the premium price for the products in this particular category and spur the demand. The move is particularly positive for life insurance company as it has a higher exposure in that particular age group segment.
All right, Yash, thanks a lot for that. So short point is that if you've been paying premium for over 3 years and did not choose to pay over the 4th year, what you would get earlier is a lot less than what you may get as it is proposed. But like Yash pointed out, this is just proposed. We'll have to figure out when this turns into reality as well. A lot of the life insurance stocks over the last couple of trading sessions have lost anywhere between 5 to 6% odd. Prakash Diwan now joins us. Prakash, how big a news piece do you think would this be from an investment thesis standpoint in insurance?
Good afternoon, Mangalam. So I don't think you should read too much into it. It's fairly hypothetical at this point in time. And as you said, the timelines are not known. Secondly, if as a policy holder, a potential policy buyer, if I have the freedom to be able to surrender my policy before the maturity in case of any contingent expenses that I have to meet, I would be more inclined to put aside a larger quantum of money, right? I mean, today you don't do it because unless you're very sure that you will be able to pay for a particular term. But in between, if I had to move out, I would earmark certain larger sums of money saying, I don't really lose much. So it's very flexible. It gives you a huge amount of flexibility as a policyholder, which means the quantums could go up. So what the insurance companies lose on margins, they could actually make up for ticket size. So I don't think it's too much to worry about. The market needs an excuse, Mangalam, to book profits in some of the sectors, and this was as good as any. And then that's precisely why you see that little bit of a reaction.
Okay. Bharti is another stock which is weak in trade. It's down 1.5%. Today, Morgan Stanley has downgraded Bharti to an equal weight. Their target price stands at 1,015. The key reasons being for the downgrade: one, the stock has been an outperformer. Year to date, Bharti is up 24%, while the Nifty Sensex is up 15%. Two, the valuations for the Indian business are higher than the historical long-term levels. Third, they believe that if a tariff hike takes place in 2024 next year, it's well anticipated and priced in. In fact, there is a downside risk if that tariff hike gets delayed or doesn't happen. Prakash, Bharti's stock had crossed 1,000 rupees. It's eased a bit. Do you think there could be some more downside? All the good news is priced in?
So yes and no, Rima. I don't think you could rule out a downside to it for the simple reason that the run-up has been in the last 2 months fairly sharp, 2-3 months actually. But if you look at Bharti from a longer-term perspective, has it really gone out of whack in terms of valuation? Has it stretched itself beyond what it should have been? I don't think so. And if you factor in a terminal, not terminal, but at least the long-range RP level of 300, is the stock available at a decent price for that? And the answer is yes. So somewhere between 800 to 1,000 is probably the sweet spot. And people will have different views, and that's what market is made of. But I would believe that you can't rule out the fact that there could be a price hike towards the second half of 24. And that would probably be steep, and it could be a sequential rise in pricing. So there could be multiple reasons once 5G completely gets absorbed in the market in terms of utility and utilization levels. So I would wait for that. I would be too pessimistic. But yes, at lower levels, it makes more sense from a risk-reward perspective.
Okay, Prakash, short conversation today, but kind of backed up with a lot of other stuff. Thank you very much for joining us, as always.
My pleasure.
It's a pleasure having you here on CNBC-TV18. Rupen Rajguru is with us, Head of Equity Investment and Strategy at Julius Baer. Rupen, good to have you with us here. Thank you for your time. I mean, just comment on what we're seeing on IT and what you guys are doing on IT services. I mean, it perhaps was a bit of an under-owned kind of space. Maybe it is just that it needed a trigger. Maybe it's just tactical and will not go on. But what are your thoughts here with what's happening?
Yeah, hi. Afternoon, Prashant. So IT at this point of time is clearly appearing to be a tactical trade. So it's actually a leverage play on how the US economy pans out. So at this juncture, at least the market consensus is getting towards a soft landing scenario, which actually is not a bad news from a corporate's perspective. So some of the reluctance which corporate had as far as spending is concerned, if the US economy were to soft land, probably that fears will no longer be there. And hence we are seeing the momentum in the IT stocks. But having said that, now if you look through, the overall hiring which the IT companies at an aggregate level have done, clearly this year has been quite abysmal. In fact, it has been negative. While the TCVs, has been good, but the revenue growth has been tapered. And with it's very much possible Q3 would be weak. So probably tactically the IT stocks have gone up, and it might make sense to take some money off the table in IT at this current juncture.
Okay, you can take some money off the IT stocks because the tactical run-up has taken place. Rupen, afternoon. Fresh investment, where would you advise? You also are recommending rural recovery, especially the two-wheelers, as a tactical play. Would you put money there, and where else?
Yeah, afternoon, Rima. In a market which is at its all-time high level, and not only in India but globally, always it's difficult to find opportunities where there is real value. So we look into the plays which have relative value. So, in fact, this theme we have been talking about for now, a couple of months. And in fact, last time on your channel, I did mention about this as well. Yes, the two-wheeler industry probably we believe will see a cyclical upturn. Probably this festive season has been good, and with potentially more money in the hands of the rural population, we will see some bit of excitement around that. The stocks have all gone up, so it's not that they are in a value zone. But on a relative basis, is there a room for them to go up from here? Probably yes. So hence, it is overall play on the rural recovery, which is backed by the more money in the hands of people, and probably we believe the rural downturn has bottomed out, and we might see an uptick overall in next few quarters. So not only the two-wheelers, but some of the rural-facing NBFCs also we believe would do well, and some of the consumption staples play which have a decent exposure on rural India will also have better quarters, at least in Q3 and in Q4.
All right, Rupen, just hang in there, because as we speak, markets are hitting fresh records. We have the Sensex at the high point, record high out there, the Nifty crossing that 21,400 mark, and most importantly, it's the Nifty Bank which is inching closer towards that 50,000 mark by having crossed the 48,000 mark in just today's trading session. Last 15 minutes or so, it's been all about the Nifty Bank. For most part of the day, the Nifty Bank was absolutely flat, and that put a lid on the gains that the Nifty saw, largely on account of the IT names. But the second half, the Nifty Bank just woke up and currently up at around 48,120. What's even more interesting is that some of the key constituents of the Nifty Bank, which include the likes of HDFC Bank, Kotak Bank, are still 6 to 10% away from all-time highs. We have, SBI, which is at a fresh 52-week high, ICICI Bank, which is at a fresh 52-week high. But HDFC Bank is still about 6% away. Kotak Bank is still about 10% away. Axis Bank is still about 4-5% away. So once those stocks move higher, we'll only see the Nifty Bank move closer towards that 50,000 mark. As we speak, Rupen, your thoughts on the banking end of things? I mean, even though the Nifty Bank has outperformed over the last 10 days or so, year to date, they have been laggards. And in that, some of the biggest names that I just spoke about have been underperformers as well. Would you bet on them?
Yeah, hi, afternoon, Mangalam. In fact, if you see, whenever market gets into all-time high, so typically we always see some heavyweights participating and taking the banks to all-time high levels. And this time around, it is the banking. And you're absolutely right in your observation. On a relative basis, banking index still is underperforming Nifty significantly this year, YTD. And some of the large mega cap private sector banks have been, and in fact, the largest public sector bank also has been relative underperform. So in the context wherein, while there are issues around NIM compression and all that, but at an overall level, macro level, if we are betting on the India story, definitely banking and financials are the sector which will be at the forefront. And at an aggregate basis, banking and financials in particular is the only sector which is trading at a valuation much below its not only its historical average, but vis-a-vis, say, a Nifty's valuation, the differential in valuation, banking index is much cheaper than its historical average. And if I were to add one more layer, Indian financials valuation as compared to some of the emerging market peers, in fact, that valuation also hit at its lowest point. So all three put together, and earnings have been pretty good, and net at an all-time high market levels. Market participants do tend to look into places where there is relative value, and definitely large mega cap private sector banks has value, and that's what it is now participating in the rally.
Rupen, any new sort of investments, initiations, ideas you can talk about?
Prashant, if you look through, at a big theme level, what we like as a theme, various legs of what you call the capital market intermediaries, right? Market at its all-time high, right? And we are seeing volumes are pretty good. How can one benefit from that theme? So some of the capital market intermediaries, be it intermediaries on the depository side, R&T side, or even some of the brokerage companies and asset management companies, because these companies are a direct beneficiary out of the buoyancy in the capital market. So I think this is a segment clearly we believe if structurally we all are positive on the Indian market and the activity in the capital market, so that the intermediaries have incomes now which are combination of transactional income as well as annuity income, and there are new sources of income also which they are getting. So that's one segment which we clearly like. And just as a corollary, with this appreciation in the capital markets, I think the wealth effect also will be seen. So on the consumption side, some of the consumptions, be it on the discretionary side, be it hotels, vacation companies, or airlines, ultimately when there is a feel-good factor amongst people, the spending level also gets higher. So in that way, some of the discretionary consumer spending also companies is something which we can look into, specifically some of the short ticket consumer discretionary items which will benefit because of the wealth effect.
Rupen, we'll leave the conversation here for now. Thank you very much for joining in. Enjoy your weekend. We will slip into a very short break on that note. On the other side, we'll get you a check on what dealing rooms are saying in our segment E-Street Chatter, and a few BTST calls for the weekend coming up too.
CNBC TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
It's been a party on D Street and everyone wants an in right now. Just as we speak, the market's at record high for all indices, and now as we speak, the stocks which had been underperforming or not participating in this rally also want an in. So something like an HUL, that should come up for you. That's, put its hand up. The other stock that is doing well is Asian Paints. So consumer stocks generally have been under a wee bit of pressure, but now with the markets moving higher, maybe it's a rising tide that is lifting boats of all these FMCG names as well. Asian Paints at the high point. We have HUL2, which after trading in the red for most part of day has moved into the green. So let's get in what the dealing room is saying. Is it a buzz with a lot of chatter? Nimesh joins in as always to get us an insight into what's happening out there. Nimesh.
I spoke about party time, but I think, for the last couple of days, the retail investors don't seem to be partying too much because, this rally is largely led by the large cap names. Look at what is driving this market up. For the second day running, the IT index is up almost 3.5%, and all the IT stocks are buzzing. So while yesterday there was a short covering, but today it looks like there is buying as well from large institutions into the IT names. And remember, there is under ownership in the IT stocks. So not only the funds, but even the retail investors and HNIs were not too exposed to the IT names. So that's a bit of a sulking point that this rally is not led by portfolio stock which they have been holding on to. So that's the overall feedback. The volumes are going to be higher side today, but that's because of the FTSE rebalancing as well. Remember, the FTSE rebal itself is going to lead to an inflow of close to $500 million in today's trade. So the FI number will look quite large in today's trade. Apart from IT, the other two sectors which have done well and which is well bid as well is metal names. They've done well in today's trade, and also the PSU bank stocks. Some bit of action seems to be back in the PSU bank names. Look at the intraday chart of SBI, Bob, all are buzzing in trade today, and there is well bid as well from the large institutions. The only sector which is underperformed today is the insurance names, and that's largely because of the regulatory changes which can hit the impact on the earnings. So that's been sulking. But I understand there's going to be a small market at close basket buying as well in select large cap names. So maybe this momentum can support because of the flow towards the end of today's trade. But the rally in the last couple of days is largely large cap. And again, within that, it's the IT which is helping the bulls to inch fresh highs for the Nifty as well.
Okay, Nimesh, in terms of individual names, what's on your list today?
Well, Prashant, the first stock on my list today is Bandhan Bank. That stock is buzzing in trade within the private names, a big outperformer in today's trade. The volumes are on the high side. There were small blocks as well, around 40 lakh odd shares. But the bigger trigger is, I understand the selling pressure from a large, strategic investor seems to be largely over in Bandhan Bank. And after that, you're seeing a big up move in that stock. So that's the first one. The second name is KFin. We all knew that there was going to be a large block, 10% equity got changed hands. The stock is under pressure, but I understand in terms of buyers, some good marquee names have bought into today's block deal, including some domestic mutual funds as well as AIF. So the disclosures could be interesting there. The third name is Tips Industries. That stock is marginally under pressure today. But again, the street is anticipating for the last many days that there could be a large block deal very soon in Tips Industries. So that is something to track there. And the last one is Ember Enterprises. Big move in that stock. It's not a very large liquid stock, so to speak. On very small buy flows, that stock is buzzing in trade. It's up 7%. But also there was a UBS initiating report on Ember today morning, and they have a target price of 4,075. So on back of flows and the initiating report, Ember is up 8% in today's trade.
Take that point, Nimesh. Thanks a lot for putting all those stocks out for us. Nimesh said that there could be a possibility of a large market at close buy trade coming in from one of the institutions as well, and that seems to be playing out right now as we speak, because all and sundry have been moving higher as soon as the clock struck 3. So you have, I did point out, HUL and Asian Paints, but look at IndusInd Bank, that's moved higher as well. HDFC Bank, which had been an underperformer for most of today's trading session, has spiked higher, maybe perhaps on account of the FTSE rebalancing flows coming in as well. And names like Ultratech Cement or even Reliance for that matter, all of them have moved well and moved to the high point of trade. Good time to get in the tomorrow trade or the Monday trade for you. Mitesh Thakkar joins in. Mitesh, what do you think one does now? Buy today for a reverse trade on Monday, or maybe book profits and come back and do a fresh trade on Monday?
So I think, we had a short-term target of 21,450, 500. We are there on the Nifty. So taking at least 1/3 profits off may not be a bad idea. Having said that, I have one BTS and one STBT because we have been trading with long only positions. I think, today being a weekend, might want to carry some short as well. So I have a STBT and ICICI Pru. I think that's a stock which is breaking down the chart setup in the short term has turned negative. Keep a stop at 525, look for a target of 505. And a BTST on Grasim, which I would recommend taking a BTST with a stop at 2119 for targets of 2160.
ICICI Pru, STBT, and Grasim is a BTST. So that is Mitesh coming in there with some trading ideas. IT on the index itself, any views with this 10% move in 2.5 days, Mitesh?
So we have had long calls on stocks. Actually, I have not been tracking the Nifty IT levels, so difficult to comment on the Nifty IT index. But we have had long calls on HCL Tech, Tech Mahindra, etc. And I think that still looks like to be a good space. But again, I think very overbought from a fresh entry perspective. I will hold my horses.
Nifty on the Nifty, the RSIs are now what 85, hitting 85 kind of numbers, right, Mitesh? So looking a little stretched in the very near term.
Yeah, but I think, Prashant, it's overbought, no doubt about it. So some caution is the only thing I would recommend because we have seen markets rally a lot in overbought situations also. I think that's not something which has not happened before. So I would not really be worried about that part of the business. And I think, once the Nifty kind of goes through some kind of consolidation, then you might see the overbought positions cooled off. So as of now, not looking at a reversal, but yes, some profit booking can happen. Just a weekend, we're closing at the week high. So I think, taking some profits off is a good idea. Maybe adding about 10-15% of short positions on stocks is also not a bad idea.
All right, got that. Mitesh, thanks very much for that. It's going to be almost a triple century, guys.
Yeah.
Yep.
We started, and I think in the last hour or so of trade, if you can just quickly have this up, I think we've added about 100 points, I think.
Yep, for most part of trade, we were at 21,300. Then just as we started the show, Nifty crossed past the 21,400 mark. And as we speak, it's 21,480. For all practical purposes, we might cross 21,500 by the end of today's trading session as well, which is still 13 minutes away. So maybe, just a few bids on names like Reliance, ICICI Bank, HDFC Bank, and you will be at the 21,500 mark, Cyril, right?
Mangalam, we've added 150 points in the last hour from the time that we started on the Nifty.
Wow.
So that is and
the Nifty Bank has added close to about 400 points in the last 1 hour.
Yeah, no, this is quite something. Even by the sort of we've seen a lot, and markets have been up a lot, but even then you sometimes marvel. 2.5% this week, so this is turning out to be pretty much as good, or for some pockets like the IT sector, etc., even better than what we saw last week. So that's where we're at right now.
Yeah, it reminds you of that saying, right, where they say, how did the market go up? First slowly and then suddenly. That's exactly what has happened all of today's trading session. It was slow and then sudden. Why just today, over the last 2 weeks or so itself? But I'll just be mindful of the broader markets, because we started the mid-cap index in line with the frontline indices, but now it's become a stark underperformer in today's trading session itself so far. Like Nimesh pointed out, most of the gains have been led by the large caps, and in large caps as well, it's only a clutch of IT stocks which have led to most of the gains. And the second half, we had the entry of the Nifty Bank itself. But the mid-cap index is all but in the red right now, even as we speak, holding up with just around 45 odd points. And if you pull up, the crisscross lines, you would see that for most part of the day, we had the green line above the red line. Even now, the green line is marginally above the red line. The advanced decline is split right down the middle. They are coming as close as one gets towards the end of today's trading session, which tells you that maybe, there is some sense of profit booking, some sense of nervousness, or maybe some sense of, overbought sort of behavior in the mid-cap end of things. So that's something we'll keep an eye out on. But good time to take a short break. Come back on the other side. We'll get chatting with Sudeep Bandyopadhyay, and at the same time, we'll track the closing of the market as well.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Well, it's another spectacular rally in today's trading session. The Nifty is 18 points, 17 points away from hitting the 21,500 mark and a 4-digit gain on the Sensex. One pocket which is a bit subdued today are some of the power names. IREDA, lower circuit of 10%, PFC, REC have corrected a bit. You've got GMR Power, PTC India Financial in the red too, and KFIN, where we had the large block deal of 20% take place early in the morning. That stock is weighed down by that supply pressure, down close to about 4%. Sudeep Bandyopadhyay with us on the show. Sudeep, in the last 2 days, yesterday and today, have you made any purchase orders?
Well, definitely, yes, I've done that for some of the clients. And, what we picked up is Reliance Industries. And these are long-term investments. I'm not talking about how much it went up yesterday or today, but this is for long-term. The other stock which we have been looking at has been Tata Power, and there also some purchases were made. Again, this is a long-term buy. It's got nothing to do with yesterday's or today's move.
You didn't buy anything in the IT pack, Sudeep? Your thoughts?
Well, I think we have been recommending, Mangalam, some buy in Wipro for the aggressive investors. I think this is a grossly under-owned stock. And we definitely expect some excitement coming back in Wipro. It's moved up a bit today, but I think, if you compare with the peers and all that, it's definitely a big laggard. But I don't think actual buying has taken place in Wipro yet. But I think I would still recommend for an aggressive investor to buy in Wipro.
You, in a way, you mean conservative investor, right? Because that has gone up the least. So it is, valuations are the cheapest in the sector. So, I mean, yeah, upside is questionable and perhaps looks hazy, not clear, but downside also maybe a little more protected.
I agree with you, Prashant, to that extent, but you're absolutely right in saying that there were a lot of confusion as far as the upside in case of Wipro. I think Mr. Premji has gone on record commenting about his unhappiness on the way the company is run and things like that. So probably we'll see some changes as well. But considering the strength of the inherent strength of the company and considering the opportunities which are emerging for Indian frontline IT companies in the global markets, I think it's a matter of time before Wipro also starts to pick up. So yes, downside is limited, but I think upside potential is a bit hazy. To my mind, I think upside definitely is going to be there if somebody is a little patient investor.
Would you bet on some management change at Wipro? Because the current CEO's term only comes to an end in July of 2025. So still a year and a half away.
Well, I think it'll be a little speculative, but we all saw the statements made by Mr. Azim Premji, and I think that doesn't augur well for the existing management, or maybe some of the changes may come in. We have seen this happening many times earlier also in Wipro. So while I would like to speculate on the current incumbents' continuance, but I think something may be in the offing.
All right, and finally, are you looking at any of these small cap names? J Kumar Infra, for instance, up 11% as we speak, and they won orders worth nearly 900 crores in this month itself. A couple of these rail names continue to do well. Titagarh Rail Systems up around 5%. Texmaco Rail, I remember, was up around 3.5%, was up a lot more in the earlier part of the day. They won orders worth nearly 1,300, 1,400 odd crores as well. So any of these big infra, rail, government plays ahead of the election, so central election that is?
Mangalam, I think the rails I'm a little scared to touch anymore now. They have gone up really too much. At this level, it is a bit risky, but infra, definitely, yes. We are looking at PNC infra. That definitely does look good at current levels. There are a lot of monetization of their projects. I understand 20 plus is going to happen in the near future. So that's one script which I think one can look at. Also, as far as the PSU basket is concerned, PSU banks definitely can be looked at because there's this entire power sector what is happening, and we have seen PFC, REC rally quite a bit. But the big checks for power projects and power will be cut by the PSU banks. They are the ones who are going to finance also, and we haven't focused on them from that angle. And I believe that there's a big opportunity sitting in the PSU banking names. even now, and that should be looked at.
Sudeep, short conversation, but thank you very much for joining in. Enjoy your weekend. Counting down to what has been a spectacular session for our markets. This is a resounding momentum seen today. The Nifty gets close to 21,500. The high today is 21,492. So 8 points shy of that magic number of 21,500. But we're going to go home with a 300-point gain on the Nifty, which is over and above the 250-point rally that we had yesterday. The Sensex is up 1,000 points. This week, we've seen a 2.5% rally on the Nifty and the Sensex. Well, the Midcap Index too didn't keep quite in step today. The Midcap Index trailed the frontliners just up close to about 0.1%, but for the week, it's still up 2.6%. The big winners are IT, the Nifty IT Index 4.7% higher. In the last 2 days, 8.5% up move, but banks too caught up. The Nifty Banking Index and the PSU Banking Index, particularly in the last 1 hour, saw quite the up move. The Nifty Banking Index up 400 points.
Both engines firing for the market, the IT and the banking index. In the last hour of trade, we had a bunch of other heavyweights contribute as well. So case in point, something like Reliance moved higher. We did see some recovery come by in a couple of these consumer names as well. Asian Paints ends the day with high, at the high point of trade. HUL is the other one which moved higher from the lows as well, and we did see some buying in names like L&T too. Among the underperformers in the frontline end of things,